Good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. This is the show where we put you in front of where the action is in the broader markets. So lots to cover today. Of course, we're seeing a little bit of a pullback here in the broader markets, given the uncertainty over U.S.-China trade action. So let's take a look at what we're going to be reviewing today. Of course, first we will go ahead and review the current market conditions. As always, you want to make sure that the markets are in a position to support any type of buying that you might be inclined to do or not. So we'll take a look at the broader markets. From there, we are going to go ahead and uncover defensive stocks that also have growth characteristics. So given the shaky start to the markets this week, you're going to want to have a watch list, if you will, of stocks that not only have been and look poised to continue to participate and do well in the broader markets, they also have a bit of a defensive feel to them. And this will make sense as we dig in and uncover some of these stocks. And then also relevant stocks that are due to report earnings this week. I know last week a large number of very well-known stocks reported. Over 170 stocks in the S&P 500 reported their Q1 numbers last week. This week, over 640 companies are due to report earnings. So that's certainly still going to be an element among and within the markets, regardless of U.S.-China trade war or any other headline risk. And then we're going to take a look at how you can play a pullback in the markets. For those of you from last week, you may recall that we had a midweek hiccup or speed bump, I like to call it, when the Federal Reserve Powell came out with comments that investors were a little rattled by. He did not indicate that there was going to be a lowering of interest rates. So the markets did pull back midweek to go ahead and recover. So we'll take a look at some of those stocks and how that pullback unveiled, if you will, for lack of a better word. So let's go ahead and get started. We'll take a look again at these broader markets. I'm going to go ahead and start with a daily view of the S&P 500 index. So what we are looking at here, of course, is that daily view. Each bar is 1 day of trading activity. And we want to key in on a couple of key items here as it relates to technical overlays. And above all, with my work, I want to pay very close attention to these key simple moving averages. This green upward trending line, that's a 10-day simple moving average. The red is your 50-day, and the blue is a 200-day simple moving average. And two elements here. Ideally, you want the index to be able to continue to find support at this upward trending shorter term 10-day simple moving average. We can see for the most part, with barring any dips, this was mid-March, and then also in the beginning of March, we had 2 periods of a little bit of a pullback. But for the most part, we have been in a period since this trough at the end of December where the indices are finding support at these upward trending 10-day simple moving average. Now, of course, today we're seeing that 1% drop. The good news is we're seeing buyers coming in on the initial downdraft dip. But let's take a look at some of the other overlays that we have on here. And up on top, I have what's called an RSI. That's your relative strength indicator. 2 things here. You want to pay attention to the position of that RSI. Is it above this net neutral? And then also the slope. Now we are currently in a period, I talked about that midweek dip last week where the markets pulled back. That did draw this RSI line down just a bit. Friday's recovery dipped it up, but today, of course, we are trending a little bit downward. We've seen again during these other pullback periods in March where they can certainly trend downward, but ideally we do want the RSI to remain above this dashed net neutral, indicating that the RSI is positive. Let's go ahead down to the MACD, and actually I'm going to go ahead and modify the bottom technical overlay simply because when viewing when you're looking at broader market indices, I've found over time that the stochastics can be more telling. And these stochastics are another momentum type of technical overlay. So let's go ahead and update our chart here so that at the bottom, we can take a look at these stochastics. Very similar principle in mind here. This dashed line is your net neutral. Ideally, now we can take a look at these other pullbacks again in the beginning and then mid-March here recently. Take a look at the stochastics and the action. It did, in fact, break below this net neutral dashed line, which takes us to 50 on the stochastics. But what we want to key in on here is what a recovery from that pullback looks like. That is the stochastics then trending upward and trading back above this dashed line. That is your all-go system signal, if you will, when you can marry that stochastic breaking back up through this net neutral with a price that is breaking back up above that 10-day. For the most part, you're in good standing. So currently the stochastics are right there at that 50. We're not quite seeing a break below. Of course, we're going to have to pay attention to the action going forward here over the next few days. But again, keying in using history as your guide as to what you would like to see if we pull back any further. So that's your broader markets. We're currently in good standing as it relates to the RSI. Stochastics still up above net neutral, and the price action seemingly poised to trade back up above the 10. Of course, we are still very early in today's action, but let's go ahead and drill down a little bit further into these markets. That's a broad overview, certainly of the S&P 500. Now what I've done is taken us to what is called candle glance. That is accessible on the initial interface page on stockcharts.com. And what you can do from here is go ahead and populate up to 12 different, you can do stocks, ticker symbols. For today, I have done the broader market indices, the Dow, S&P, NASDAQ, and the Russell. I've also populated ETFs of the various sectors in the broader markets. So XLF is financials, XLK is technology, and so forth. And from here, what we can do is go ahead and overlay an indicator. I've overlaid the RSI, that's a relative strength indicator, sorted it by descending. You can do ascending or descending. So from here, we can see strength to weakness, and this is going to be based on recent action, but certainly today's action is going to have quite a bit of impact. So we can see certainly that volatility spiked. It did get up well over 18. It appears to be settling back a bit. So we're in the 16 range here for the VIX. We can look at a bigger chart down the road, but generally speaking, 16, 18, as we creep into this area, it is well worth paying attention to. Again, we'll go ahead and look at a longer term chart to give you a feel, but once we start seeing these spikes in volatility, it very well could be forward looking. And then moving along from there, again, we're looking at relative outperformers within these sectors relative to each other. So this first grouping we have up here is XLP. This is your consumer staple groups, a lot of food products, products that are needed regardless of the economy. And we can see that it is up here in the forefront. I will tell you, consumer staple stocks on average within the XLY have an average yield of about 3.3%. So this has been making stocks in the staples section also attractive. One other item within these staples is the fact that a lot of these companies, the consumer staple companies, are responding to a new consumer subset. In other words, they are doing a lot with their pricing, with repackaging, rebranding. So there's a lot of growth going on in here as well. So we are going to go ahead and drill down, take a look at some of these consumer staple stocks that could potentially offset some of the higher growth stocks. As volatility gets higher, we do tend to see slipping and slippage among higher growth stocks. So we'll drill down into consumer staples. Take a look at this, financial stocks. Now they are dropping a little more than the broader markets today, but more recently we've seen financial stocks join the party. so to speak, come back into play. We did see a big spike in yields on Friday, given the strong employment numbers, and that helped these financial stocks as well. The Russell 2000 had a fantastic week last week, and that is truly good news because as small cap stocks go, this is the Russell 2000 index. Small cap stocks will tend to lead the broader markets, and when we see a movement, an upside in small cap indexes and stocks, that is a signal that the economy certainly is growing. And we did see that again with Friday's employment numbers. So that is very good news. Now, technology stocks are getting hit, down 1.5%. A lot of that is that high growth that I talked about. You will see, we're also going to drill down. I'm going to show you within technology the areas getting hit the hardest on trade talk weakness, and it will make sense to you to watch your positions in that given group. So let's go ahead and take a look at some of these other areas. Industrials are seeing slippage today, down 1.4%. Of course, if we see China a breakdown there, that is going to impact these industrial stocks. So let's go ahead and dig right in, because there's a lot that I want to go ahead and share with you. So we're going to go ahead and start with what's called the sector summary. So I'm going to take us to that first interface page here on stockcharts.com and show you how you can access what is called the sector summary. So when we have movement such as today, where the impact and the sell-off is very defined, it's related to China-US potential trade war difficulties. There are going to be certain areas that are going to be impacted more than others. So I talked about the materials. China is a big importer of a lot of steel infrastructure type materials, but I want to key in here on technology. We talked about it. It's down 1.4%. So what you can do is go ahead and click onto the name of that sector, and what you can immediately see is the groups that are getting hardest hit. Now, computer hardware is, I'm going to tell you, it's probably, let's just take a look and see what the impact here. Oftentimes it will be one or two stocks, and indeed it is. Okay, so this is Apple. Apple is a very large component of this sub-industry grouping. So when Apple drops, so too does this group. But let's go back and take a look at those technology stocks. And I'm going to tell you that it is semiconductors. This is an area that is going to be highly impacted. These semiconductor stocks, most of them have a majority of their revenues are derived from sales to the Chinese market. So for those of you that are holding some of these semiconductor stocks in your portfolios, let's take a look at some of the higher ranking. This is your Scooter, your stock charts tech rating, technical rating. The higher the number, the better. These are going to be your better performing stocks up here relative to others. They are technically sound and outperformers by and large. But what we can do from here is go ahead and take a look at some of a better known name within the semiconductors. This is Lam Research, LRCX. So simply what I want to do is show you a price chart, and I'm going to pull up a daily price chart of Lam Research, and we can take a look at the current price action. A lot of what I'm going to be reviewing here is very similar to the broader markets. So we can see that Lam Research did break below this upward trending 10-day simple moving average, which had been support. And the RSI is trending downward, but we're still in very good standing as far as it being well above that net neutral 50. Down below, I do have the MACD. You want to pay attention to that black line relative to the red. So down here at the end, we can see the black line is poised to potentially break below the red. That could be a little bit of a yellow flag, but it is still well above this net neutral 50. So historically, it can be really quite helpful to go back and look at prior periods that where the a particular semiconductor stock pulled back and what that recovery looked like. I'm taking us back to the end of February, and during this period, semiconductor stocks were still very gray. There was uncertainty surrounding their potential recovery. The numbers weren't quite in yet. So let's take a look at this March pullback in, for instance, LRCX to give you a feel of what could potentially happen if we see a continuation of the China-US trade war tariff difficulties. So taking us back to this end of February, LRCX as an example, we can see that the stock broke below that 10-day simple moving average. I talked about that being your first potential signal that there could be further deterioration ahead. And as the stock continued to decline, we can see that the RSI did eventually break below that 50. That's taking us right to this particular drop down. We can see the MACD had that negative crossover in line with the break below the 10-day simple moving average, black line through the red. So it takes us down as the stock continues to deteriorate. But from my work, I stay with the stock as long as it is finding support at an upward trending 50-day simple moving average. We can go over any number of examples, but as long as the stock is remaining above that 50-day simple moving average, the MACD never got below this net neutral zero. So while we have this negative crossover, we're still in good standing here. And indeed, the stock did find potential eventual support at this upward trending 50-day simple moving average to the point where we had the 50-day cross up through the 200. That's your golden cross. And then this very slight drop was reversed so that the RSI did find positive trending, upward trending. So that is what we want to look for. So for now, we are certainly doing just fine. We had a little bit of a break below the 10-day. There does seem to be buying on the dip, but more importantly, your RSI still in good standing, MACD still above that net neutral. Let's see if we can go ahead and get back to that candle glance list. We can take a quick look. AMD is another big stock. This is advanced micro. We are again looking at a daily price chart here of AMD, another semiconductor stock. And this particular stock is not quite as robust or healthy looking, so it could be a bit more susceptible to any potential downdrafts. We can see also that the 50-day is very close to that 200-day, so not as certainly good of an example, simply because the stock has not been participating in the upside rally. So it is an underperformer and an outlier. So let's go ahead back. And I did want to point out to you other areas where we can look at areas that would be more impacted than not from more continued potential trade war fears. So here we are again, the sector summary. This is for today. And initially, it will go ahead and provide you with a performance on the day. So we can see technology stocks are suffering a bit more. So industrial and material stocks are also going to be potentially impacted. I do not traffic very much in the materials sector, but this is what I talked about with steel, aluminum, these metals. These are going to be those infrastructure plays within the Chinese economy that are going to be impacted the most. But let's go ahead back to that sector summary. Take a look at the industrial sector, and we can see very interestingly that defense-related stocks are remaining up here in the forefront. And this, of course, has everything to do with the U.S. military budget. The proposed budget for next year is going to put the U.S. military budget at an all-time high. But military budgets globally are really getting to be quite large. So those defense companies that interface globally are going to be positive. But what I wanted to key in on down here are those that are going to be more negatively impacted from potential trade war fears, industrial machinery, these types of stocks that provide certainly for mining and other types of activity. But let's go back into industrials simply because this is a practice that you can do on any given day, so that when you see groups that are bucking the downtrend in the broader markets, let's go ahead and take a look, because it could be very compelling as potential candidates of individual stocks. So I'm going to go ahead and take us into the defense related stocks. You just simply click onto the name of that sub industry grouping, and let's go ahead and sort it by scooter. And up here in the forefront are your, again, more technically sound stocks. And what I want to do is simply click onto one of these stocks that are, again, more technically sound and not getting hit with the broader markets. That could be a very interesting stock. So this is L3, a very large defense related stock. And in fact, it looks very, very compelling. This is a company that reported their earnings last week. Take a look at that gap up on their very strong numbers. The volume there is well above average. So when we see these stocks gapping up on earnings, on volume, that is going to be very, very compelling, simply because this volume is indicating that institutions may want to get into the stock. We talked about the stock potentially finding support at an upward trending 10-day simple moving average. The RSI is positive. MACD up above this net neutral zero, and had that positive black line up through the red. Now, I also wanted to point out to you the phenom after stocks gap up, because buying stocks into earnings has proven again and again to be really a risky type of endeavor. So oftentimes waiting for the company to report can really make sense. So a lot of times after these stocks gap up, they will mark time, if you will, and in essence digest this big gap up in price, and then oftentimes this 10-day simple moving average will eventually meet up with the price of the stock, and that can be a very ideal entry point into a given stock. So let's go ahead. I talked about getting a bit more defensive given the dynamics currently in the market, but also with that in mind, stocks that have growth as well as a defensive feel to them. So I talked about earlier taking a look at consumer staple sector. Again, this is a sector that is going through a lot in the way of shifts among many of the larger companies within this sector. So we can see this is by simply clicking on that sector, the consumer staples. It's providing us with these sub-industry groupings. And there's not a lot going on today, but that's a good thing because the broader markets are down over 1%. So what I'm going to do from here is key in, we can simply overlay on top of that given symbol for the subgroup and take a look at where the strength is. And sure enough, it is food products, food retailers, and wholesalers. So we're seeing quite a bit in the way of strength. I'm going to go ahead and access the food products subgrouping. Now, here are the stocks within that grouping. And we can see, again, some of these down and out stocks are seeing rallying. But for my work, I want to key in on where the strength is, where the technically sound companies, because from my work, I'm always screening. I'm looking for that next big winning stocks. Those winning stocks are going to have strong fundamentals. And then oftentimes I will go right here to these subgroupings, sort it by scooter, and sure enough, those fundamentally and technically sound stocks are up here at the forefront. So let's go ahead and take a look at this first stock. It's Pilgrim's Pride, PPC is the ticker symbol. Take a look at this strength, and this is during a period when high growth tech stocks, consumer staple, consumer discretionary stocks are all doing well, but many of you may not have noted that in the background we have some of these consumer staples. So this is all about, there's quite a dynamic going on among those that provide chicken related products. And we can see this big pickup here. This is the company moving up on very, very strong earnings. Analysts are raising estimates. They're looking for 32% growth this year, 20% growth next year. Analysts are continuing to revise estimates higher. So quite clearly, this is in an uptrend. We can see that the RSI is above 70. That indicates that it's overbought, which is fine. It's just with an eye toward at some point there may be a pullback, but it can remain overbought for a significant period of time. And we can see that the MACD here on the bottom is also above this net neutral zero in positive territory. Let's go ahead back to this food products. I'll point out a couple of other stocks before we go ahead and move on to other defensive plays that could potentially make sense here. So SAFM, this is Sanderson Farm, another chicken play. Take a look at this tremendous uptick here, 292% earnings growth for this year, 52% for next year. So we can see that the stock very much has growth prospects, but it is also a defensive play. It has an almost 1% yield, very much in an uptrend, finding support at that upward trending 10-day. MACD and RSI are also positive. Even Hershey, HSY, is getting into the party. This is a gap up here on the earnings. This company provides a 2.4% yield. It's pulling back to that 10-day, which is very, very standard practice as long as it continues to find support. The stock's trading at a multiple of 22 times, so there very well could be more potential upside there. So this is the kind of practice that you can go ahead and drill down and take a look at some of these consumer staples sub-industry groups. I'm going to go ahead and take us to one other area. This is soft drinks. Again, we're going to sort it by scooter. And from here, we can see these are your winners currently, but again, they are strong for very sound reasons. Let's take a look at MNST. This is another stock that recently reported. Their energy drinks are finding tremendous traction. So we can see this gap up as the stock continues to potentially break out of this 2-month base. Growth prospects here, 14% this year, 12% next year, but we like to see this big volume on the gap up. That's indicating more potential upside. Of course, we want that 10-day to go ahead and catch up. And I would be remiss without going ahead and talking about a couple of the stocks that are due to report this week that could have a potential impact on the broader markets. I talked about 640 companies that are due to report, but not a lot of them are particularly well known. But I'm going to show us a couple of stocks that have been big winners. This is TTD Trade Desk is the name of the stock, and we can see it is in the digital advertising space, very much in an uptrend. These guys are due to report this week, and depending on how they report, what I did want to point out to you, it can be very helpful to look at prior reports. The stock gapped up. This is their Q4 report, and it traded up subsequent to that. So that's the kind of action that ideally you would want to see. Disney is certainly a big name that is due to report this week. Let's take a look here. And we can see this is all about their news as far as their streaming video service. And then, of course, they are just breaking all kinds of box office records with their latest movie. It surpassed the Titanic over the weekend with over 200 billion in ticket sales. But the stock is pulling back here. It will be very interesting to see, in fact, how the company comes, of course, how they come out with their earnings. Their recent news is not going to be impacting their bottom line just yet. They are on track for negative earnings, and analysts are actually lowering their estimates for the company. So this is going to be certainly one to keep an eye on, because if we see a pullback, I will tell you Disney longer term is a must-own stock, but I would wait for it to pull back and see how it responds to their earnings release later. Actually, they come out with numbers on Wednesday, and I do believe that I am close to having to leave it at that, but we can just take a quick peek at one last company that is due to report earnings this week, IAC. This is another previously fairly big winner. It is an internet-related internet content company, and they are also due to report midweek. So for those of you that are trading the markets, I'd like to say good luck.